Does it say we're live? Does go live red?
The go live is red, but the recording button is still gray.
That doesn't matter. We're not recording to the SD card.
Okay. All right. Well, then I suppose we're live.
We're not though.
Let's see.
Guess we are live. Hey everybody. I'm training some new people here, so bear with us on that rough intro start. I guess we're live. Everybody, if you can hear me and my audio is good, please put a Y in the chat box. I'd appreciate it. Just because last time I was not happy with how the audio turned out, so I want to make sure that you guys are having an enjoyable experience from here on out. So if you can help me out with that right at the very beginning, if you can hear me, everything is good, give me a thumbs up. Yeah, yay in the chat box. I just want to make sure that first and foremost, you guys can hear me. Hello, hey guys. Just waiting for your responses. We probably have a little bit of a 30-second delay on there. So I'll just keep talking to monitor the comments. But guys, are we not living in unprecedented times right now? Isn't it crazy what's happening out there? I mean, from a global standpoint, of course, with COVID-19 plus all of the other things that are happening in the world today, particularly in the markets. Guys, last week, my weeks are all messed up, but last week we had a boot camp. And we saw unprecedented or historical days, right? With the volatility in the markets. And so I thought it would be prudent or basically required of me to kind of talk about how to navigate these nefarious waters, if you will. What's going on and what can we see? What can we see ahead? What's happening? Particularly because I felt like at boot camp, I got an opportunity to sit down with a lot of traders who were just getting started in the world of trading. Guys, if you are getting started, what a great opportunity to learn and to see what's happening in the markets. If you already are established trader and being successful in your trading, what a great opportunity is to pull profits out of the market, right? Unfortunately, or fortunately, however you want to look at it, I guess half full, half empty, the stock market's been tanking, right? People are losing money in their companies and their 401ks. While that is certainly unfortunate, the fortunate part for us is that you can make money in the currency market no matter what the rest of the markets are doing. Right? Of course, that does increase volatility, it does increase risk, and it certainly does increase exposure. And so the first thing before we even get started into buying the dip is what we called it, I want to make sure that everybody is, for lack of better words, have your first aid kit next to your trading first aid kit, right? Because you're going to get caught in moves that are not normal. You're going to get caught in moves that are historic moves. And if you're on the wrong side of those moves, you need to be cutting your losses sooner rather than later. Do not, I would say, do not in your head say, well, it's going to come back. Right? Because you could take catastrophic losses if that's something that you're telling yourself right now. Well, it's got to come back. We haven't seen lows this low. It's got to come back, right? No, don't say it's got to come back. Cut bait, get in, and so you can get in again, right? So there's a couple things that I want you guys to know and to understand. Well, first and foremost, I don't know if you guys know this or not, but we actually had an earthquake here this morning. Yeah, an earthquake in Utah. Imagine that. It doesn't happen very often. It's kind of like, I was telling somebody that I was talking to on the phone, it's kind of like having Southern California receive snow, right? We have an earthquake. People don't know what to do when there's an earthquake, even a little one. And if it snowed in Southern California, people wouldn't know what to do either. And so we're kind of, I wanted to still get this live out to you guys. Although everything is kind of calmed down and settled down, you can imagine kind of the fear and panic that went through. The great thing about it is, though, is for about at least a couple hours, nobody was really talking about the virus. We were all talking about the earthquake. So change the story a little bit. So that if there's anything the positive that came from that, that's awesome. So let me talk about a little bit about buying the dip. Now, buying the dip or selling the rip is often is what is talked about. It predominantly is around the market, right? Market conditions. If you're into stocks, bonds, S&P, and we all know that those have definitely tanked a lot, but particularly last week. The one thing that I would caution you guys, absolutely caution you guys, is it's not a good time to buy just yet. So if you don't know what you're doing in the markets and you hear people saying it's at all-time lows or it's record lows, it's got to bounce, it's got to rebound, that is what is called buying the dip, right? As a market dips, traditionally, it'll bounce back up and you can make money on that bounce. Well, I'm here to caution you guys against buying the dip at this point in time. But I'm also going to give you guys some opportunities to look for when we can start to buy the dip, right? When the dip starts to do this and come back is what you want to do. But again, extreme caution. We do not want to buy or invest right this second because, as we know, we're still getting news events that are not positive almost on a daily, sometimes hourly basis. So the more negative news that we get, the more times that, the president says, we're gonna put money over here, we're gonna spend money here. That is unfortunately will cause the markets to have more to have more instability, if you don't mind, for lack of better words again. And so we don't want to buy the market. We don't want to buy the dip just yet. However, if you were like, hey, I got an extra $5,000 sitting around or whatever, there are a few things that I would recommend buying. Obviously, it's a no-brainer that maybe Costco is something that people might want to look at to buy. Another thing, Facebook, if people they're sitting at home, they're going to be on Facebook. I'm not telling you this as a portfolio manager. I'm saying there are certain things that might be not troubling or time sensitive or proof, right? So Costco, Facebook, things of that nature. Look at those. Do your due diligence on that and make sure that you're seeing what I see, and that is an increase. And so if you have an opportunity to do it. Now, let's get back to a little bit about trading currencies a little bit. Now, buying the dip, I would say on a stock market, if you're investing in the stock market, use extra caution. What you're going to want to do and you're going to want to wait for is signs of positive news. So when we start getting positive news, like the virus COVID-19 is starting to dissipate, or we're lifting the social bans, people can now gather, things like that, then is a time to see the market start to rise. Okay. And only then will we want to say, okay, now it's time to buy the dip. As long as we are still getting news that the economy is still unstable, we don't want to buy the dip. Okay, and that is my first and foremost thing I want to let everybody know is to be cautionary on that. Okay, be prudent, watch the news, and make sure that you're not putting. And the reason why I'm bringing this to you guys right now and today is because unfortunately, last week we saw historic lows. Normally, what you would do is you would go in and you would buy on the S&P, or you would buy stocks or whatever, and you would load up. Well, unfortunately, we had some traders do that and get burned. And I'm like, well, I feel like the timing is now to come out and say, let's not do that. Let's just hold, let's practice a little bit of patience before. I think everybody kind of optimistically believes that in the next little while, we might start seeing some positive news. Well, let's hold on those investments until we see the market start to turn. However, now, let's turn our attention to the currency market. Again, what a great opportunity we have to make money in a market that is unstable. In fact, a volatile market, as you know, is one of our best friends. And so we certainly have seen that in the currency market. If you guys have any questions, I'd love to hear from you. So ask me any questions that you guys have. I do have the separate monitor up, so I will get to your questions. It's good to see Ken, Hook 357, Appreciate the shout out, the highs. Mark, Michael, appreciate it. So thank you guys for being with us today. As we're, most of us, I'm curious, are anybody that we have on today, are you guys actually at home, working from home, or in the middle of maybe a quarantine or something like that? If you are, this is a great opportunity to sit and watch and learn how to trade if you're in that mode of learning how to trade. So that being said, I want to kind of share my screen with you. If we could flip over to my screen. Guys, I've had such phenomenal days trading. And we're going to go ahead. I don't see my screen on. Go ahead and flip to my screen. There you go, right there. All right. Now you guys should all be seeing my screen, okay? This is my trading for today. And I want to kind of share this with you guys. I literally spent probably about 30 minutes in the market, and that's all today. As you can imagine, with an earthquake happening, we woke up to it this morning, shaking. And I got to share this funny story. My wife will probably kill me. But when my wife and I are laying in bed, and I feel the shaking, and I kind of come to, and I hear her go, huh, and put her hand over me, and she's the first thing out of her mouth was, "I'm not ready yet." And I'm like, well, you better be. And she's like, "Is that an earthquake?" I'm like, "Yes, it is." And luckily for us, we were, had just a little bit of, like a train going through your house, nothing too major. But like I said, we don't experience that, or we're not used to that. And so really, really shook us up a little bit this morning. However, I found about 30 minutes today to sit and trade. And inside of 30 minutes, the volatility was awesome. Did you lose my screen, John?
Yeah, you were telling a story.
Oh, okay, thanks. So I want to share you guys my screen here because the volatility has been awesome. If you guys don't look at price and time cycles and don't use that in your trading, highly, highly, highly recommend that, because that's something that I've been using quite a bit, and it's been pretty successful. So what I mean by that is if you just take the measuring and you go here, and we go from here, this is one cycle, right? 20 pips. And this is another one, right? 15. This is a bigger one, 30. And then we kind of had our sideways move here. But you see the movement here. I guess when I was trading, let me look at what I was trading this morning. Right here, I was kind of trading this choppiness right here. But what a great opportunity it was to trade. I had 10 pips up, 10 pips down, 12 pips up. So I was in a 10 to 12 pip opportunity of up and down movement. Guys, what really, really is difficult to trade is when you can see this euro right here, is when you have a marching market or a market that just tends to want to go one direction. Now we have seen that obviously all day today. It's just gone down. And so we see that and we know, so obviously the sell is going to be our bias, but there's plenty of opportunity to make money. And I want to just show that with you guys. Look at, well, yeah, I'll just show you guys my order history, okay? So you can kind of see, look, I'm buying, and I'm buying the market here. And I'm just going for 2 pips is all. Sometimes I don't even go for 2 pips. When the market stalls, I get out. So I'm buying, I'm selling, I'm buying, I'm selling, I'm buying, I'm selling, right? You see that? And it's just, I'm playing the swings. I'm playing the price and time cycles. I'm buying, I'm selling, I'm getting 2 to 3 pips. I'm not going for home runs. You can see this is that I'm just stacking my trades, guys. And as this morning I started out with a 0.02 on my quantity size, I quickly increased that as the market was just moving really, really good. I tend not to increase it unless I see opportunities. And like I said, in a half an hour, I was able to pull about 3% out of the market today. I'm done trading. I typically don't trade for 3%. That's not what I do. I usually trade for about 1%. It was just so easy that I kept going and going and going. I probably had like 3 or 4 iterations of the same move that I was able to capitalize on and be able to do that, right? Was awesome. It was a complete awesome opportunity to jump into the market. I would recommend that, and going back to the currency world, that you do buy not the dip. I want to make sure that we're understanding the terminology here. But in the currency world, if a market does take I want to use the same word as dip because I don't want to confuse you guys from what I said earlier. If the market does go down, then buy it on the up, right? So what I mean by that is, you see here, we had a shot down, and I'd still be, if once it crossed over here, we have a oversold market. We're definitely in an oversold market. And so I bought on this candlestick, and I kept buying, and it shot down. I'd buy. When it goes up, I'd sell right here. I'd sell right here, right on the up. And then I'd buy when it comes back down. And you're constantly doing that. Buying, selling, within a 10 pip range, right? Because I just showed you our price, our time cycle, our price cycle was about 10 to 12. And so I know it's about 10 to 12, so I'm only going for 3 to 4. I am really likely to hit that if I'm in a time cycle of 10 to 12 pips. I'm likely to hit 3 to 4, even if I have a spread that's pretty high right now at 1 point spread. Guys, I hope that makes sense to you guys, is that your time cycles and your price cycles will help you to determine A, how much quantity should I put in, and B, how many pips should I be taking? Okay. And so as we're constantly looking at that, that's going to help us a ton. You see the market right this second. If we're going up right here, we're going up. Let's see, we just went down 25. We're going up 20. I could probably see it going up to here. So 25 right here. Right here, once it goes up 25, 26 is a good opportunity to jump into a sell. And so you look for those opportunities, right? So you're buying, you're selling, you're buying, you're selling. In fact, I'll jump in because I'm confident that it's going to hit that. Look, I'm not asking the market to move very far in order for it to hit that. Right? But I'm also, in my mind, I'm also saying, if it doesn't, let's say we get a huge run, well, this is where I'm going to pull my trades off, right? Because also in this market, you have to be wary of the long or the shot ups or the long streaks. And so you got to be willing to cut your losses as soon as it crosses this point and not say, well, it'll come back, because the chances are in this market, it's not coming back and you're not going to see that. And so I'd rather cut my losses early than hold on to those, if that makes sense. And so, like I say, I'm just buying that. Everything says it's moving up and moving up, but all of a sudden I sold it, and right there, boom, I was able to capitalize on a few more pips and put in my bank, right? So that's all I'm doing right now, is just taking little tiny sips out of the market. If we're moving 10 and 10, I'm going for 2 or 3, right? I'm going for a third of whatever the time cycle is. And it's an awesome opportunity to capitalize on that. Do we have any questions out there as to what we just talked about? So I want to recap before we close up. I'm just going to keep this one short and sweet and to the point. Be take caution when buying stocks, bonds, all that kind of stuff. In fact, I'd go as far as to say, wait until we have some positive news coming out before we see that bounce, right? Because it could go lower, and we've seen it will. And so, and then also on the currency market, do a little buying, do a little bit of selling, take sips out of the market. Don't go for home runs. Don't go for those big swings. It's really, really tempting right now because you're seeing 50, 20 pip moves and you're like, I want to capitalize on that. Don't. Take about a third of what the time cycle is telling you to do, and I think you're just going to be just fine. Thank you for those of you guys who have reached out to me. I met with 4 of you guys last week. I'm meeting with some more of you guys today. Look forward to that. I'm putting videos together of our one-on-one trading sessions that we're having, and I'm kicking them out to our YouTube channel. And so if you're not, obviously, if you're just visiting, please subscribe. And if you want help, we're going to make this an ongoing thing of where I'll sit down, give you guys about one-on-one, and then I'll record that session, kick it out to YouTube. Hopefully that'll help everybody to become a better trader, because the first thing that I'm asking you is, what do you struggle with the most? And if you have the same question as somebody else that I'm talking about, then yeah, that's gonna help, I hope. So anyways, stay safe out there. Do whatever you need to do for your needs. But in the same token, guys, this is a great opportunity to make money if you can't in any other source. That being said, I appreciate you guys. And if you have any questions, hit me up in the comment. We're still monitoring comments. We're still running. So thank you guys, and we'll see you guys hopefully next week. Appreciate it. Have a good day.